Hey people, what's going on? Welcome back to the channel. Hope you're well and in good health. Okay, we're taking a look at a Guardian article today about the UK interest rates and a warning from the International Monetary Fund in terms of the rate that it's going to stay at potentially or go to next year. So let's dive in. The Bank of England will need to keep interest rates high well into 2024 as the UK struggles with a combination of weaker growth and persistent inflation, the International Monetary Fund has warned. In its half-yearly update on the global economy, the IMF said growth had already slowed fairly sharply and painted a downbeat picture for the government as it enters what will almost certainly be an election year, probably around the autumn time, maybe September onwards, probably looking at general election here in the UK. Now, the general perspective is for fairly subdued growth and failing momentum, potentially, stagflation, said Pierre Oliver, basically the IMF's economic counselor, at a press conference in Marrakesh, Morocco, in terms of launching the World Economic Outlook. Right? The labour market is cooling, but inflation remains quite persistent. Monetary policy will need to remain tight for a little while longer and into 2024. The IMF estimates the UK will be the slowest growing economy in the G7. Obviously, it's not good for Brits here in terms of the advanced nations, although basically WEO's forecast of interest rates peaking at 6% has been revised down to 5.5% at the start of 2023. Now, the IMF predicted the UK would contract by 0.3% this year, but now it believes it will expand by 0.5%. Now, it's also expressed concerns in terms of the possible global economic impact of conflict between Israel and Hamas, which he said the IMF was monitoring very carefully. While it was too early to say what the impact would be, Greensill said that sustained 10% increase in oil prices would knock 0.15 points off global growth and add 0.4 points to global inflation in the subsequent year. Since the conflict began at the weekend, crude price have risen by 4%. Now, the rise reflects a potential risk that there could be disruption to the production and transportation of oil. Now, in its half-yearly WEO, which has produced before the surprise attack on Israel by Hamas, the IMF said growth had shown remarkable resilience in the face of a series of adverse shocks in recent years, with activity slowing but not stalling. IMF said it detected little evidence of wage price spiral, but warned central banks against cutting interest rates too quickly. So probably a measured approach would be more beneficial. Now, it said several headwinds to growth had subsided since its spring meeting in Washington in April, and the World Health Organization no longer considered COVID-19 a global health emergency. Supply chains had largely returned to normal financial conditions, and basically they eased as well after US and Swiss authorities acted to contain turbulence in the banking sectors. Now, the WEO report said growth was expected to fall from 3.5% and then obviously, contract a bit further as well. Let's find out where that article part is just switched to. Sorry about that. Right, where were we? Yeah, 3.5% in 2022, 3% this year, and 2.9% in 2024. The 2023 forecast was unchanged from the IMF's last set of prediction in July, with 2024 estimate revised down by 0.1 percentage points. The USA is expected to grow by 2.1% this year and 1.5% next year, up 0.3% and 0.5 percentage points respectively since July. Obviously, lots of figures and data there. So Greensill also said the global economy continues to recover slowly from the blows of the pandemic, Russia's invasion of Ukraine, and the cost of living crisis in retrospect, and the resilience has been remarkable to a point. As a result, projections are increasingly consistent with a soft landing scenario, bringing inflation down without a major downturn in activity, especially in the US, where the forecast increase in unemployment is very modest, basically going up by 0.3% in the next couple of years. Greensill said that slowdown was more pronounced in advanced economies compared with emerging markets, and that USA had surprised on the upside with resilient consumption, while the Eurozone had been revised downward. He also said that even though recession would be averted, global economy was limping along rather than sprinting. Obviously, lots of issues, lots of concerns there in terms of that. So you can see how the interest rate will potentially move in terms of the coming, 6 to 12 months going into 2024. Let us know if the interest rates are affecting you, whether in the UK or elsewhere. Please do like, share, subscribe. Please comment below. Let us know what you think. Please consider joining the channel by clicking the join button. Support us on Patreon. Link in description. Don't forget to subscribe. Alright, people. Catch you in the next one.